April is here, and so our financial preparedness for the whole financial year. This week we have 3 interesting and important webinars only for you. Morning 10 a.m. we have Why April is the Most Crucial Month for HNA Portfolio Strategy by Udhaya Kumar. Morning 11 a.m. if you have recently sold a property and you are thinking about how to reinvest the whole proceeds. So this webinar is for you, sold a property, and here is how to reinvest. Morning 11 a.m. we also have another webinar, 5 important money moves every Indian investor must know in April. Links are in description. Register now.
Experiments are very important to an investor. An experiment helps you learn. Importantly, you learn by yourself. Most people spend a lot of time analyzing the portfolios of others and trying to learn. But in my opinion, creating a portfolio on your own, stepping aside, looking at it from a distance and learning from what you are doing is a better way to learn investing. At any point in time, an investor should be learning to be better prepared for the future. So, in investing, learning is meant to be continuous. It is this continuous learning that made me start a US boring portfolio on 31st August 2023. So, 2 years and 7 months later, we now are still figuring out how we can invest better in the US market, what we are doing right, what we are not doing right, and what drives that market and how we can be a part of it. The current portfolio of US boring stocks comprises 10 stocks, all stocks weighted equally. Now, first, let's take stock of the performance of this portfolio since inception till the 31st of March 2026. The 10 stocks in this portfolio are the entire FANG, which is Meta, Apple, Amazon, Netflix and Google, that's Alphabet. So, these are 5 stocks. Outside of this 5, we have 5 other stocks which are Crocs, Uber, Costco, Kava and Pepsi. So, predominantly we have a very healthy mix of FANG and non-FANG, and these 10 stocks comprise this portfolio. Since inception, the US boring portfolio has made a return of 63.99% over this 31-month period. And during the same period, the MSCI World Index has made a return of 43%, while the Nasdaq 100 has made a return of 53.25%. So, over the Nasdaq, we have a little over 10% outperformance, but over the MSCI World Index, we have 20% clean outperformance over this 31-month period. So, which are the stocks that did well in the recent times and which are the stocks that actually didn't help this portfolio? Obviously, Google has been one of the drivers of this portfolio. Crocs, which had a rough time, has done better in recent times. Uber has been a distinct laggard in this portfolio. So has Amazon. We also have Kava, which is a surprise performer. In fact, Kava is the best performer in recent times in this portfolio. And another laggard in recent times is Netflix, and so is Costco. The rest of the portfolios haven't done much either ways. So, overall in this portfolio, you have 3 distinct laggards, which are Uber, Amazon and Netflix. Costco is also a laggard, and you have mainly 2 companies which have done exceptionally well, Alphabet and Kava. So, that is the story of the portfolio since inception. Now, let us see what happened in the month of March. In the month of March, the US boring portfolio fell 3.71%. During the same period, the MSCI World Index fell 5.34% and the Nasdaq index fell 5.09%. So, in a very tough month also, we haven't done too badly, though we have fallen. So, a falling market is not something that we can escape. So, we do fall, but we have fallen less. And which are the stocks that actually did better in this month and which stocks weren't showing strength during March? Let us see that. So, if you look at the companies which showed some strength, it is basically just Kava. The rest of the portfolio struggled. Netflix lost very little, just 0.97%. Costco lost 0.63% and Amazon lost 0.06%. Crocs lost 4.41%. Uber lost 5.29%. Alphabet lost 6.29%. Apple lost 4.13% and Pepsi lost 6.07%. The worst performer in March was Meta, minus 12.37%. So, overall, it is just one stock that did well in this month. A few stocks didn't do too badly and quite a few did badly. That is the story of the US boring portfolio in the month of March. Now, let us see what happened in the calendar year 2026 in this portfolio. The US boring portfolio has gained 0.32% from January 1 to March 31. The MSCI World Index has lost 2.88%, it is minus 2.88, and NASDAQ Index is down 8.69%. So, actually the US boring portfolio has held very well from the beginning of this year, but it still has a long way to go. And let us see what caused this holding up. Primarily, Kava has been a brilliant performer. It went up 55%, Pepsi went up 10.12%, Costco went up 8.61%, and the rest were all marginal performance. Crocs plus 2.29, Alphabet plus 1.11, and that is about it. Then you have all the laggards. Uber is down 27.87%, Amazon is down 18%, and you have Meta down 10.12% and Netflix down 12.60%. So, you are seeing 3 of the FANG stocks doing badly and Uber being the worst performer, but still one stock performing well can actually hold a portfolio up, and that is the lesson that this portfolio is teaching me in this calendar year. 2026 is going to be a difficult year. Nothing can be predicted. No assessment is cast in stone. So, all this can change dramatically. We will have to see how resilient the portfolio that I have built as the US boring stocks index turns out to be. It is a stress test for the portfolio. It is also a learning test for the investor in me, and I am sure all of you would be doing your own portfolios in your own way and making these assessments all the time. I am having fun and enjoying sharing these assessments with you on a regular basis, month after month. Do share your comments on the US market, investing in the US market, being an active investor in the US market, the trade-off between passive investing in the NASDAQ 100 and forming a portfolio of your own. Do you think that what I am doing is even necessary? All these should be in the comment section of this video. Let us keep talking, learning and growing. Thank you for watching this video.